The S&P 500 and Nasdaq Composite rose Monday, boosted by tech shares, as Wall Street tried to recover from a tough week. The broad market index gained 1.2%, while the Dow Jones Industrial Average added 0.4%, or 143 points. The Nasdaq outperformed, rising 2%. Investors are buying the dip with the technology sector, which lost 4% last week, as yields fell on Monday. Nvidia rose more than 5%, reaching an all-time high, and Amazon rose more than 2.5% to also lead the Nasdaq higher. Apple also ticked more than 2% higher after Evercore ISI advised clients buy last week's dip. The yield on the 10-year Treasury yield, meanwhile, lost nearly 4 basis points to 3.991%. Boeing, weighing on the Dow, fell more than 6.4% following the temporary grounding of dozens of Boeing 737 MAX 9 aircraft for inspections, after a section of an Alaska Airlines fuselage blew out. The Dow was down as much as 216.87 points on the day before making a recovery. "I think it's still a new year, the same bull market with the same risk," Adam Turnquist, chief technical strategist at LPL Financial, said. Last week's losses coupled with Monday's moves on the 10-year yield have given investors enough confidence to step back into tech, he said. "The simple story is stocks were overbought and yields were oversold. And now we had an excuse for a little bit of a bounce in both. Nothing really too concerning at this point," Turnquist added. Wall Street is coming off its first losing week in 10 as mega-cap tech stocks such as Apple underperformed, and Treasury yields rose. The Dow Jones Industrial Average dropped 1.5% for the week, and the S&P 500 slid 0.6%. The tech-heavy Nasdaq Composite posted its worst weekly performance since September, falling 3.25%. This week, traders may gain greater clarity into the path of rate cuts from the Federal Reserve. The December Consumer Price Index is set for release Thursday, followed by the Producer Price Index on Friday. Those numbers should show whether the central bank's efforts to bring inflation down to its 2% target are taking hold. Ariel Investments' Charles Bobrinskoy believes that investors are too optimistic for their own good right now. "You pay a big price for a cheery consensus," the investor said on CNBC's The Exchange, citing a Warren Buffett quote. "We went from a lot of pessimism, a lot of certainty that we were going to have a recession, to a lot of optimism. And there's way too much consensus that there's not going to be a recession. Interest rates are going to drop and the stock market's going to do well." While the investor generally agrees with the positive consensus, he added the caveat that too much optimism makes him nervous. "Things can still go wrong, often for reasons that we don't expect," he said. Bobrinskoy added that he's currently most worried about the Chinese market, citing possible headwinds such as a residential real estate collapse and a possible Taiwan blockade.